A lot of people are afraid to touch SMCI right now, not because it lacks orders, but because no one is willing to bet on when trust will come back. Audit issues, margins, cash flow, regulation. If even one of these isn't confirmed, the stock stays pinned. In today's video, I'm answering just one question. What is the real reason SMCI is stuck where it is? Hey everyone, this is Stock Market Breakdown. Today we're only talking about Supermicro. SMCI. The biggest issue here has never been whether the world needs AI servers. It's whether the market is willing to trust the company's financials. Orders can be strong, but if trust isn't repaired, the stock can move sideways and grind you down for a year. We're going to connect the audit controversy, profit structure, cash flow, and key price levels to see clearly whether this is an opportunity or a time delayed landmine. Let's start with price action and sentiment. Recently, SMCI has been oscillating around the $30 level. On the surface, it looks calm, but underneath, the market is deeply divided. Bulls argue this price massively undervalues real demand for AI servers. Bears remain focused on accounting and governance concerns. More importantly, SMCI has failed to move in sync with the broader semiconductor rally. Price is telling you something very clearly. The market doesn't care how many units you ship, it cares whether it can trust the numbers you report. As a result, the stock is trapped in a range, neither breaking out nor collapsing, steadily draining investor patience amid uncertainty. A lot of people think of SMCI as Nvidia server box. Nvidia sells chips, SMCI flies, but reality says otherwise. Even strong server shipments can overcome a trust discount. The market isn't looking for a story of once verifiable financial quality. Until that hurdle is cleared, the stock stays boxed in, grinding investors down day after day, making you question your position without giving you the confidence to exit. If you rewind to the original trust shock, the discount makes sense. When Ernst Young resigned as auditor, it was like dropping a nuclear bomb on the stock. The worst-case short narratives were instantly amplified. Many expected delisting, DOJ raise, even catastrophic outcomes. Instead, the company hired BDO, caught up on delayed filings, and regained compliance. It survived, but markets don't reward survival with a premium. Trust is rebuilt only through time and consistent financial reporting. As long as DOJ language remains in the risk disclosures, institutional compliance teams will simply pass no matter how cheap the stock looks. That's why you see such a strange combination: growth that looks like an AI company, paired with a valuation that looks like traditional manufacturing. A mid-teens forward divided by E for a company growing revenue around 50% is almost absurd. Value investors will study it. Momentum traders won't touch it. They don't fear bad news, they fear uncertainty. And as long as uncertainty remains, the stock just floats. And that's where the pain comes from. But if you step away from the financial statements and look at the engineering reality, SMCI's edge is very real. The company is shipping direct liquid-cooled racks at scale, reportedly thousands per month, with high-power chips like Blackwell coming online. Air cooling simply can't handle the thermal density. Liquid cooling is an option on its survival. And this isn't just about swapping a heatsink. It requires scalable supply chains for piping, connectors, manifolds, coolant distribution units, and fluids. SMCI started earlier than most competitors. That's the moat they can legitimately claim. Dell and HP will catch up, but replicating full data center plumbing is far harder than it sounds. And this is where the tension shows up. Advantage doesn't automatically mean profitability. In the most recent earnings, gross margins dropped into the high single digits, and that spooked the market. It looks like price cuts to win orders. Potentially a price war with Dell. Revenue can grow fast, but if margins get crushed, valuation won't expand. That's why the stock couldn't hold above $40. Investors are asking a blunt question. Do you have pricing power, or are you just a box assembler? Spend some time on X and in the forums, and you'll see a community split down the middle. On one side are the diamond hand bulls averaging down, convinced that once the DOJ clears the company, the stock goes back to triple digits. They blame every dip on hedge fund suppression and track dark pool data for proof. On the other side are traders who bought the breakout and are now down 60–70%, openly frustrated. They hear optimistic guidance from management but want to see cash flow. Hardware is working capital intensive. Puts are bought up front. Racks are built. Inventory piles up, and payment comes later. Faster growth tightens cash. Credit lines and convertible debt follow. Bears see insolvency risk. Bulls see future revenues sitting in boxes. Everything hinges on whether demand actually converts. There's also an old thorn that never fully goes away: related party transaction allegations. Even after the special committee found no fraud, the market doesn't instantly relax. Every quarter, investors watch not just revenue, but receivables and collections. If receivables grow faster than sales, trust gets docked again. That's the reality SMCI lives with. Do you trust BDO? Or is the internal control's opinion enough to keep you out? Let me know. Technically, the structure is clear. Buyers consistently step in near $28. Sellers consistently cap the stock near $35. Price is stuck in a $28–$35 channel, with a 200-day moving average still pressing down. From a trend perspective, that's bearish. To change it, the stock needs to reclaim $35 on volume and regain the 200-day. Only then does the market acknowledge accumulation is over. There's also an energy angle that's often missed. Liquid cooling isn't just faster, it's more power efficient. As regulators increasingly focus on data center PUE standards, high-density liquid-cooled racks could shift from a selling point to a requirement. The tailwind isn't priced in. Competition is real. Dell and HP have stronger balance sheets and enterprise relationships. Many CEOs instinctively call them first. On the other side, hyperscalers are designing their own servers and pushing ARMs to cut costs, squeezing SMCI from both ends. The company survives not on relationships, but on speed. Whoever delivers the new platform first wins the order. That's the hard-edge reality of this business. Short pressure hasn't disappeared. While short interest is down from crisis levels, it remains elevated versus the sector. If positive catalysts hit, covering could amplify upside. Those catalysts fall into two buckets. One is trust-based, a clear DOJ resolution that removes compliance risk. The other is operational, margins rebounding to 11–12%, proving this isn't a race to the bottom price war. At the same time, as Blackwell's supply constraints ease, capacity that can actually handle high-power, liquid-cooled racks could drive a sudden acceleration in orders. Only then would a move above $35 carry real trend significance. So the real question isn't whether SMCI has a story, it's when the market is willing to reprise that story. As long as trust isn't formally restored, the stock stays trapped. Wearing down patience. What you're seeing isn't a lack of opportunity, it's opportunity locked behind time, waiting for a single confirming event to flip sentiment. When you connect all these threads, it becomes clear that SMCI isn't waiting for demand, it's waiting for verification. Verification that regulatory risk is gone. Verification that margins aren't collapsing. Verification that inventory turns into cash flow. Once any one of those is confirmed, the market's valuation model changes immediately. That's why options traders are positioning early. They're not betting on daily price moves, they're betting on a rating. And when perception shifts, price moves tend to be discontinuous, not linear. At its core, SMCI is a race between trust and supply. You either wait for trust to be restored, or you wait for Blackwell volume to force orders higher. Watch $28 and $35. If $28 breaks, don't be stubborn. If $35 is reclaimed, the market is accepting it again. I'm not telling you to buy or sell, I'm just putting the rules on the table. This is Stock Market Breakdown. I'll see you next time.